I'm going to be going over a lot of vocabulary, and you guys really need to pay attention to this vocabulary. It will help you out in the long run, and it's very, very good that you guys know this vocabulary. So the first thing I'm going to go over is a bubble. I'm sure you guys have heard the term bubble, and a lot of you might not know what it means. So a bubble is a situation where the prices are irrationally high as compared to the actual value of the asset. How much revenue is this asset bringing? How much money is this thing bringing in? If something is worth $1,000 and it's only making, let's just say $10, and that's how much it makes, let's just say in a year, that's pretty overvalued. That's a bubble, right? And an example would be Theranos. It was an asset company that was in a bubble, and you guys really have to make sure to look for how much money is this crypto company or this platform really generating, and is it a store of value? Are people just investing into it to hold their money there, like some of these cryptos that we see, Bitcoin, Litecoin, and those two are very, very good for storing value. But we're gonna get into FUD. So FUD, you guys might not know what this is as well. It's fear, uncertainty, and doubt. A lot of these news sites will post FUD articles. What does that mean exactly? They're posting something that's trying to spike fear. They're trying to get doubt in the market where people sell off. When people see FUD, they tend to sell off. They tend to get rid of an asset because of this news is scaring them. And some people will put FUD articles or FUD explanations out there. It's not the best thing for people to really have, but it's good to understand because you guys will not get into the FUD. If someone ever says that, you know what it means now. All right, so the first type of trading we're going to be talking about is day trading. And we have around 3 to 4 that we're really going to get into. And day trading is basically taking a position in the market, either buy or sell, and exiting in the same day. So you're not keeping it for more than 24 hours. And you have normally leverage when you're doing this. But in crypto, you can make a lot of profits by not even doing leveraging. If you're in a bull market, if you're in exactly where we're at in crypto right now, we've seen 50 to 60% profits without even day trading. Okay, we're not putting leverage on it, and we're just trading without leverage. We'll get into leverage as well. Not all day trading is using leverage. Just want to throw that out there. All right, so the second one, swing trading. This is when you guys are going to be holding something for around 2 to 3 weeks. It could be, I would say, anything over a week is a swing trade, and most of my trades are swing trades, just like this person who wrote this book is. I mean, we have the same opinion. You guys will be making most money and most profits off of swing trades. You guys, if you're very, very new to this, you guys do not want to do day trading. Okay, swing trading is the most rational way of making profits, especially in crypto. You guys hold something for a couple weeks, 3 weeks, and you see the technical analysis is starting to head down and it went up, you guys are going to sell, and that's called a swing trade. You enter and you hold for a couple weeks and then you sell. It's probably the most successful one besides holding long term. That one's a very, very high success rate holding long term, but swing trading is also probably behind that with the success rate. How much are you going to be successful, right? And day trading is very, very low success rate, guys. I want to let you guys know that right now. Only around 5 to 6% of people are successful doing day trading. So positional trading. The aim is to buy monthly lows and hold them for days, weeks, or sometimes months. This is a longer term trading period. And yes, we do long-term trading. I really suggest you guys to do long-term trading if you do not have too much time on your hands and you guys can't look at let's say 5 cryptos for maybe 30 minutes to an hour or 2 a day. That's really good for you guys to do because you could just hold this for months, wait for it to hit your sell price, and once you guys figure out what the bottom is of the graph or the chart, you guys are buying the bottoms and buying the lows. It's very, very successful. So I would say swing trading and positional trading are the ones that a lot of you beginners are going to definitely need to start doing. And day trading, you guys got to practice that one a lot. We will get into it, but day trading is taking a position in the market, either buy or sell the same day, like we said. Leverage trading is refers to the extra amount of an asset bought or sold over your capital limit. Let's say you had $2,000 worth of Bitcoin with $1,000 of capital. You have leveraged of 2x, and sites that do this is like BitMEX or Bybit. And I'm sure you guys have seen this on YouTube. There's a lot of people that do leverage trading. I don't recommend it, guys. I really do not recommend doing leverage trading, okay? Especially when it gets into the 10x to 20x leverage or anything above that. I would say if you guys are just starting out, 2x leverage, 3x leverage is not the worst thing in the world, but you have to understand it is risky and you guys have to be using technical analysis. I do not recommend doing leverage trading until you guys seriously get a success rate going with swing trading and positional trading. So long position, this is a buy position with leverage. So there's short and long, and shorting something is you're putting leverage, okay, and you want it to go down. You're putting leverage that this will go down. You want the price to fall. And shorting allows you to make money in a bear market. This is why I said we can make money during a bear market by shorting. And there is ways to make money in the bear market when that comes, when prices of stuff falls in crypto. And long positions is basically what we're all doing right now. We're all wanting the market to go up, and we are getting a lot of profits from just saying that the market is going to go up from here. And you could even put leverage on it, by the way, but that is what short and long is. If you're referring to a short and a long, it always has leverage on it, okay? And volatility. So volatility is how the market is moving, right? Each crypto has different volatility. The more money that's going into the crypto, the more money that's coming in and out of the crypto, is what its volatility is. It is the percentage movement in a price of an asset over a period. A balanced volatile asset gives ample opportunity to short and long. Traders look for the predictable volatility. A very high volatile or low volatile asset, it's considering good for trading. So you guys do not want to be trading anything that has low volume, meaning that it's not going to be going up or down in price too much, so it's not very predictable. If you guys can pick out patterns through this volatility, if the volatility kind of stays the same, the same patterns emerge, it's very, very predictable. So we're going to get into support and resistance. So what is a resistance level? It is what the price is not breaking out of. You guys are not seeing this price being able to push out of it. And if you guys look where the R is, every time you guys see these candlesticks that are not being able to break out of that level that's above it, that's a resistance level. And the support levels are what it's not able to break downwards out of. What is it not dropping to, and what is it bouncing off of? And as you guys can see, the S's are circled, and it's always going to be a red candle because it's coming down. But those are the support and resistance levels. You guys can pick up some very good trends with just pointing these out. And I really suggest that you guys go look at some graphs and some charts and try and point some out. What are walls? We're not talking about actual concrete walls, okay? These are extremely large orders at a range. And these are put either to buy or sell. So you could have a sell wall or a buy wall. And it's how much capital is standing at that wall. Meaning that if there's a lot of orders that are selling, the price is definitely going to be going down if it's outweighing the buy wall. So the demand zone is a zone with huge buy orders. This is determined through the heat map. Supply zone, a lot of sell orders. We went over stop loss, and we need to go over liquidity still. The measure of how activity the coin is being traded in the market. A high liquidity coin exchange has many buyers and sellers at the same time, making it easier to acquire or sell the coin at any time. And an uptrend, okay, we really need to focus on this uptrend. So what is an uptrend? You guys see how it's making higher highs. We see higher highs, meaning we see a low right there, right? But what does it make? A higher high, right? We see the higher high. It just keeps on uptrending more and more. And there's a higher low, if that makes sense. It's a lower high. So meaning that the dip that it had was higher than the dips that it's had in the past, like back here. And you guys can see the uptrend really taking off right here. This is exactly what an uptrend will look like. And it's very good to point out the higher highs and the lower lows. And the downtrend's the opposite, where we have lower lows and lower highs. And with consolidation period, you guys are going to see a very flat and stagnant price. You guys really need to make sure that you know what consolidation is, because that can lead to volatile movements in either direction. And a correction is when you're making a new peak or an upwards rally. Many people define a correction as a 10% drop from the all-times highs, but I don't believe in that, because we are in crypto, guys. We have 10% drops from the all-time highs literally every day. All right, I'm not going to be going over the rest of this vocabulary. The book is linked in the description. And it kind of covers the basics, but I'm going to have you guys try and figure out the rest of these on your own. I know you guys can, and it wouldn't really be too helpful if I just went over every single thing. You guys need to be doing some learning by yourselves if you guys want to be really successful in crypto. I will give you guys a lot of great buys, as I have on my channel, but if you guys really learn these basics, I promise you will be successful. And we are going to be getting into technical analysis in the next episode of this. So really make sure for that, really make sure to have all this stuff down, because we are going to be using this vocabulary again. And this is very good vocabulary to understand. I'm going to start using higher vocabulary on my channel now that I have some sort of course. So hopefully we can all get to the point where we're very good with our vocabulary, and we can get into technical analysis very easily.